the idea is basic. After a decade or more of China not being able to put money into this economy here in the United States, Bloomberg's reporting that its tactic is now to say to the US government, reduce technology restrictions in particular, and that's what might happen. As somebody covering this sector, your reaction?
I think this goes back to a decision by the Biden administration of restricting semi-cap equipment below 14 nanometers almost a year and a half ago. And if you really look through that report and how it's transitioning to the Chinese government, they can't manufacture, and this is AMAT, Lam, CLAC, et cetera, and ASML, they can't manufacture next generation AI chips if they can't get to that 3 and 2 nanometer node. At the 2 nanometer node where TSM is going right now, the architectures are changing to gate all around and backside power. I think that's really important as you relate to next generation AI architectures. They can't get there. So if they're willing to bargain away that technology transfer and in return open up the spigots of investment, not only agriculturally, potentially, but also manufacturing, it really is a huge game changer of how we have been positioned in the last 2 years.
Ted, therefore, positioning, just from an investor perspective, do we get even higher valuations because there's money coming in, and then NVIDIA and all the others, KLA, for example, and indeed AMAT, which we're seeing under pressure today because of the $600 million revenue hit they're going to be feeling by yet more restrictions on their equipment going to China. Does that inflate ever further?
It throws a bunch of gasoline on the fire because if you look at China, they're probably one of the largest, well, they're the second largest economy in the world. And next to the US on AI, they're probably in the number 2 position. If you don't transition to this next gen AI architecture, whether it be agentic or where we're going, just take OpenAI as a benchmark, you risk not only your sovereign economy, but more importantly, your sovereign defense ability, because we are pivoting in the US so quickly on the defense side to AI. It's a dual discussion. I think the other issue is one of geo exposures. Right now, the street has really shied itself away from anything with, I would say, over 10% China exposures, because look at AMAT last night. Everybody's gotten bitten.
Right.
That would totally open up the investment angle for all those China exposures. And right now, the largest are probably Lam, AMAT, and CLAC at about 30% exposures. That would take away the bear argument.
Ted, whether you meant to or not, you are talking about the 3 biggest stories of the day. Bloomberg reporting that if you take apart Huawei's Ascend, it has Samsung and SK Hynix in it. The disclosure about Applied Materials. Do you see a change of US policy coming or not?
I just, I go back and look what the Trump administration did to the Middle East. Who would have thought that we would open up all the AI technology to Saudi Arabia and others, I think in reply to lower oil prices. This is the art of the deal. Right. And right now we're playing chess on 4 levels, and it's very hard for at least the tech investors to decipher. But it would pour a lot of gasoline on the bonfire.